a good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Saisha Faridi, and the closing trades are looking a tad bit mixed, and I say that because we're off the highest point of the trading session, but we are not at the session lows as well. We are somewhere in between the range, so a bit of a choppiness in the last 1 hour or so, but we've definitely slipped below the mark of 19,500 convincingly. If you look at the broader market, that is where the larger pressure is today. So both the mid-cap and the small-cap indices are actually trading in the red as we speak. There has been a fall of almost 1 percentage point as far as the mid-cap index is concerned. What is standing tall today, however, is the IT pack. A bit surprising because the numbers from HCL Tech or TCS were a big surprise on the upside, but nonetheless, the street is perhaps factoring that the worst is over. So you have TCS, HCL Tech in the green. Quite a bit of recovery for HCL Tech actually from the lowest point, and Wipro ahead of its earnings is also quite excited. Real estate pack is also seeing some gains, so whether it's a Phoenix Mills, a Macrotech developer, Sobha, they are up for you on the screen with a gain of anywhere between 2 to 5%, and a couple of these new age tech companies, the likes of Zomato as well as PV Fintech. We're watching out for those because they too have perked up a good 4 to 5%. So a lot of stock specific yet again, Aisha, but the theme today is clearly IT.
Oh yeah, the theme has been IT. TCS's Q1 numbers have been in line, 8 to 10% revenue growth guidance in FY24 muted, but I think the street is really taking away and penciling in that perhaps this is the worst of it all that you are seeing from the IT majors, even the HCL Technologies for that matter. Disappointing pretty much on all counts, but the guidance was made, and I think the street is really deriving some comfort from that. So just look at the way the IT pack has actually panned out. So even while HCL Technologies was down about 1.25% to start off the day with, it's covered all of its losses, retained itself back in the green, and that's been the case for TCS as well. Barring that knee-jerk reaction that you had on open, or for that matter even on pre-open, from there it's really been one-way move up, almost holding up 2.5%, and I think the high point of the day it was up about 3% or so. Wipro on our radar now, expects slow revenue growth led by the BFSI segment, but let's see, looking at the mood across the IT pack, let's see what Wipro actually does. Federal Bank, that's really been the one which has been in focus after its earnings came out. To be fair, the stock has been under pressure from the word go today. A lot of talk around their QIP and how it's going to be priced, etc. 4.25% lower. Even the numbers haven't managed to resurrect the counter. Anand Rathi, though, on the other hand, a 10% up and still going good by about 8.25% in the back of very strong commentary coming in from the management. They're saying that while they have a 1% equity market share right now, they hope to scale that up to 2 to 3%. And across the board, especially with the wealth management services business, they see a strong growth coming in. Brokerages as well, slew of notes coming out this morning, besides, of course, reactions to IT. For Samvardhana Motherson, Jefferies has upgraded it to a buy from the earlier hold. The stock has been one of the top F&O gainers from the word go today. And Bank of America has downgraded Power Grid from an earlier buy to now sell. And that stock, of course, is beleaguered about 4% lower now as I speak. But the overall market, that seems to be in ship shape. Even though we've eased off from the top of the day, we managed to clock a fresh high for ourselves today. So let's take that conversation forward. Kunal, Naresh on the show with us. Kunal, Nifty index, but let's talk about the IT strength. Are you surprised by the way IT has performed today?
Well, not surprised as such, Aisha, but I think this was an impending move. Now, there could be two textures which we can associate with the IT rally. One is maybe short covering. I think we'll get to know by the end of the day, once the data comes out on the Bhav copy, that whether it's a slew of short covering or a blend of short covering for most of the IT names, and specifically the large cap ones like TCS, Infosys, etc., which had been an underperformer or beaten down most. Or the other way to look out for is that whether this could be a start of a fresh trend, when there's a build-up of long positions on the F&O side, as well as strong delivery data on the cash side of the market for these IT names. So I think depending on how the data indicates today is where we can expect that the IT stocks could probably head towards. But I think this was pending up for these IT names. You can't have a market rally which has been so buoyant in the last 4 months, and one sector which is one of the major one of the highest weighted sectors as such, I think could probably remain as an underperformer for a long bit of time. There's bound to be some short covering, some catch up which had to play for these IT names. My only sense is that possibly that this could be a start of a possible strong catch up for these IT names. specifically the large cap ones.
Okay. Though I'm holding my, skepticism as far as the IT sector is concerned, whether that upside is warranted or not, but that's another discussion altogether. But let's talk about some of the other buzzers as well. Naresh, your sense on Power Grid, which has taken a knock of a good 4%. We were just highlighting the note that came in from Bank of America. And what about Federal Bank? Naresh, you'll have to unmute yourself.
Power Grid has seen a decent correction, breaking the recent swing lows around the 250 mark. Now, 235 to 240 is a support, so closer to 240 is where I would expect it to pause. And that's an opportunity to buy for a bounce back in this case. Again, slowly and steadily, the stock should go back to 260. So, waiting for that dip towards 235 to 240 mark for an entry. Federal Bank has been trendless in terms of the range. 120, 22 is the bottom. 140 has been a tough ask for the last almost 8 months. Every time it has gone closer to that 140, 135 mark, the stock flips off. We saw that happen a couple of months back as well. And 120, 22 is the lower end of the range. So for now, we are right in the middle of the range. So nothing to trade out here, but would wait for whenever it gets out of this range, that is where a new trend could start.
About Federal Bank, but in fact, on that note, listen into what the management had to say, because the net interest margin was around 3.15%, whereas the street was expecting 3.3 thereabouts, and of course, the QIP is something which is weighing heavy on the counter as well.
Okay, let me just begin by saying that the quarter that went by, Q1 is seasonally a slow quarter. We've had an exceptionally good, strong beginning, the strongest in a long period of time I've seen. Sequential growth, you would have noticed on credit and deposits has been almost near 5%, both businesses sequentially growing. That sets the base for a strong FY24. NII grew 20% and NIMs were at 3.15 for the quarter. We had said that FY24 will be sort of a year of two halves, with the first half seeing some compression in margins. And we did see that come through. But what is most heartening and encouraging is that the outlook for NIM, for at least for us, looks like Q2 onward, we will start seeing the expansion back, because the pricing on the deposits is now almost at the tail end. And therefore, we believe the NIM expansion should start back in Q2. Pressure in Q1, it's just a tail effect or the lagged effect of the pricing differential, the rate passing difference between the credit book getting the pricing upfront and the deposits lagging it. We had said in Q4 as well that we will have 1 quarter more, as in from then, of the impact of the transfer of price. And we believe that has played through in Q1 of FY24. So now from here on, the yield on advances expansion will be higher than the cost of deposits. So the spread opens up again, and we believe, we ended at 315. We expect 7 to 8 basis point improvement in NIM as we go into FY24, second quarter of FY24.
Okay, that's the take coming in from the Federal Bank management. ICICI Bank, that's holding up 1.25% today. But let's see what HDFC Bank is up to. It's a combined HDFC Bank entity that you're seeing on your screens right now, holding up quite smartly, 0.6%. The other stock that I want to bring up for you is M&M. Now, there are talks that Tesla may actually be coming out with a very cheap model for the Indian roads, priced as low as only 20 lakh rupees. You heard me right. Just 20 lakhs as opposed to what average Tesla converted into Indian rupees would cost, which would be, I think, around 1 crores or something. But yeah, it seems that they're going to come up with a cheap model for the Indian roads. Now, that 20 lakh ticket is something that's going to hit not just M&M, but pretty much across the spectrum, the likes of Maruti, Tata Motors, etc. as well, because they too have cars in this particular segment. In fact, I just want to flag off one of the brokerage notes as well, which my colleague Somit just shared with us today. He's talking about one of the brokerages, talking about how the Made in India Tesla is going to actually pan out for the likes of M&M, for instance. And they're saying that it's going to be pretty similar and it's going to target the likes of M&M. The EV story, they're saying, has been built by M&M. M&M is planning 3 to 4 EV launches by the end of the calendar year 24. They got investment from PE at a valuation of about $5 to $9 billion. And in the last 2 to 3 weeks, the stock also has run up on further PE investment news itself. So they're saying that Tesla coming into this particular segment of a 20 lakh rupee car is going to be not such great news for M&M. Today, of course, the stock also is a little bit under pressure. Now, these are just news reports that we're picking up. What our sources are indicating that Tesla could be looking at such a cheap model. But Kunal, you've been tracking the charts of M&M for a while now. Do you sense any sort of consolidation or correction on the cards?
Well, yeah, consolidation is actually going on for the auto stocks. In fact, even for M&M over the last 4-5 days, the stock has gone through a bit of a plateaued range. So I think 1590.95 is the upper end of the range for M&M. On the lower side, I think 1540.45 is the support. So which means a 40-point band, 40-50 point band for the stock in the last 4 to 5 trading sessions. I think the indicators have not yet actually entered into an neutral territory. So which means that there could be a further leg on the downside. But I would expect a very marginal kind of a correction for these auto stocks, not a major correction in play for these auto names because of the way these stocks have rallied up higher. When a sector gets into a rally mode and when stocks within the sectors, they participate in phases and not that all stocks participate at the same time and then they move up higher. I think that's a classical sign of a within sector rotation. And that's the kind of a sector trend which generally tends to last quite strongly. So I would be bullish on the prospects of M&M over the near term. Yes, the stock may correct marginally. Maybe come back to a 1520, 1540 mark, but that would actually be a good contra buying territory.
The entire defense pack is also in focus. Some flashes running for you at the bottom of the screen, wherein that confirmation has come that the Scorpion class submarines, which will be made by Mazgaon Dock, of course, this was much talked about, but now it seems like the final confirmation has come through, and the likes of Data Patterns, etc., as it is, have been doing quite well from the start of the trading session. Even an MTAR Tech and all of these companies could be the ones which can get some sort of subcontract or components, etc. So these stocks are holding up all right. But Naresh, I just wanted to get a sense from you with respect to the PSU banking space. It's been fairly volatile. It's one day on the front foot, 2 day on the back foot, etc. Is there any structural trend that you're spotting on the Nifty PSU bank index or any of its constituents?
So they have a tendency to be very volatile. The problem is if you look at the largest one, which is State Bank of India, that is the one which is not able to break out. So the stock had topped out around 600 levels back in May, June. And even in the last 4 sessions, it has not been able to hit that 600 mark. The all-time highs for the stock are around 620 odd. So till the time we don't see that breaking out in a major way, the rest of the banks could also remain under pressure. Bank of Baroda has made a decent enough move. Can Bank has made a decent enough move. They could go and retest their breakout level. So for that, Bank of Baroda has a retest around 190.95. Can Bank has it around closer to 320 odd levels. So a retest of that levels and then maybe a bounce. But overall, the longer term structure has not changed for Bank of Baroda, Can Bank. SBI can create a move only once it starts crossing about 600.
Okay, that's the take coming in on SBI and PSU banking names. But on that note, slipping into a very short break. Don't go anywhere because the market is coming under bit of pressure as we speak. We are now threatening to go below the mark of 19,400. We'll track that when we come back.
Back with the closing trades right here on ET now. Let's just revisit what the closing trades have settled in at. And after making a fresh high on the Nifty, clocking 66,000 on the Sensex, from there, we've petered down just that wee bit. We're still holding on to 19,400 plus levels on the spot. 19,483 on the futures. The futures, by the way, have completely cooled off now and on the brink of dipping into the red. The breadth of the market, though, has already gotten challenged, I must say. We're already sitting in the red right now within the F&O universe because you've got a count of almost 148 for the broader end of the market, or the declines rather within the F&O universe. Power, chemicals, oil and gas, barring technology, actually, most sectors within the F&O universe have already managed to slip into the red. Let's welcome them on board, Sandep Sabarwal, and talk to him about what he's making of the market right now. Sandeep, hi, afternoon. Good to have you on the show as always. Sandeep, surprised by the market's reaction to TCS or HCL Technologies numbers, the move that you're seeing on IT today?
Aisha, this happens every time because people are inherently bullish on technology stocks, especially the retail investor community as well as a large swath of fund managers. So what we have been seeing over the last 2-3 quarters is that every time results come out, there tends to be a worse is over kind of buying which happens in this sector. And then as the quarter plays on and people realize that the worst is actually not over, then these stocks give up gains. So I would think that a similar phenomena could repeat going forward because the outlook for most of these companies has not improved. It's actually deteriorated. And for this year, most of the large IT companies will have earnings which will be -5 to +5% of last year's earnings. And valuations are around 20 to 25 times for most of them. So I think it's tough to make a case to buy right now. So it will be tough for this move to get built into any sustainable big up move. So they might just hold on because finally they are cash generating companies with no debt. So to that extent, the risk in terms of overall risk in these stocks tends to be low, but the outlook is still very hazy.
In the near term, Sandeep, you think today's uptick should be sold into because the stocks have also recovered quite a fair bit from the last quarter when the performance and the earnings were way worse.
Yeah, so for those who own technology stocks as a big part of their overall portfolio, obviously they could trim. But for if you have some exposure which is much lower than the overall market index exposure, etc., you can just hold on. So because uh, even the downside of these companies might not be more than 10-12%, and the upside won't be more than 5-10%. So I think that's how I see this sector right now.
Okay, just the important flashes for you at the bottom of the screen. Look at that fall as far as the small cap index is concerned, 1.7%. So it's not just a very small number at that. There's almost a 2% cut from the highest point of the trading session as far as the small cap index is concerned. In absolute terms, down about 117 points. But Kunal, I wanted to flag out some of the stocks which are actually holding on to the all-time high levels. Case in point being Tejas Networks, which is higher by 15%. You have Phoenix Mills, which is up around 5%, and Metro Brands 2 is perking up with a gain of 4%. Any calls?
So Tejas Network, I think it's a good time to try and look to exit the stock because after a major amount of consolidation, the stock has come back into a deep overbought territory on the chart. So I think looking at the divergence from the 200 DMA, this seems to be a stock which has now gotten to an extreme. I would expect a cool off of sorts for Tejas Network. Even for the likes of Phoenix Limited, for example, that stock has come back into a breakout mode. 1630.35 was the breakout for Phoenix. The stock went up to a 1700 mark today, but now again it's cooled off back towards the 1630.40 levels. Metro Brand is the only stock which I believe looks to be an attractive bet because of the calibrated move the stock has seen in the last 1 month, 3 months, and as well as over the last 6 months. I think 3 month back the stock made a low which was around 840, gradually formed a pattern of high highs and high lows, and is now at 1060-70 levels. So that's the stock which looks fairly attractive and will continue to hold on with a potential target close to 1140 over the very near term.
Sandeep, why this disappointment on Federal Bank and way ahead of its earnings? I mean, the NIS was slightly below, the PAT was below, asset quality was in line, but was the market only anticipating weak numbers and selling off before the event?
Sorry, I have no idea. I'm not looking at the stock at all.
Okay, take that. Since we're talking about banks, let me now take it across and get you some of the buzz on South Indian Bank this time around. And we understand from sources that there is a search on for a new MD and CEO, and that may have actually come to an end. Sharad is here with more updates on the same. Sharad, what are you picking up from your sources?
Well, yes, in focus we are having South Indian Bank, and what we are picking up from our sources is that South Indian Bank's search committee likely to have recommended Shalini Warrior as the MD and the CEO of the bank. Now do remember, she is currently the Executive Director of Federal Bank, and also she has served as a COO, which is the Chief Operating Officer, from the years 2015 to 2020. Now South Indian Bank has actually submitted a list of candidates, and that also includes the name of Shalini Warrior to RBI. And going ahead, the RBI's final approval is awaited on the candidates chosen by the South Indian Bank as the MD and CEO. Now, looking at South Indian Bank, they are searching for the new MD after Murli Ramakrishnan had asked his consideration not for an extension going ahead. And for both the banks, Federal Bank as well as South Indian Bank, they did not respond to the queries sent by ET Now. Now, of course, looking at South Indian Bank, the stock reaction also, that is up almost 3 times if you see over the last 1 year.
Interesting one at that. South India Bank hunting for its new leader, and let's see which the exact candidates are and when we hear finally with respect to who the new chief is. But shifting focus to what else is happening in the market, and it's Zomato as well as PB Fintech, which is perking up quite a bit. Sandeep, do you track either of these names, and are you at all positive about these?
Not at these prices, like TB Fintech, obviously not, because I don't think they have any sustainable business model. Zomato, of course, is a company which has a sustainable model, and it operates in a duopoly. So I was of the view we should buy this at 50, 55, but I never ended up buying, and now it's gone up to 80. So I'm not looking to buy at 80 because I think at 80 it factors in most of the positives which could play out over the next 1 or 2 years. So we'll need to see how the next couple of quarter results come out and then evaluate whether to buy this stock or not.
Okay, so that's the take coming in as far as some of these new age tech companies are concerned. What else is passing on good amount of volumes is Prestige. Of course, there was a large block that happened there, as well as the entire news flow. Within the realty pack itself, Naresh, which is the counter that looks the strongest to you? And would you buy the dip on Prestige today?
So it was just a interim dip for the day, and I would still wait out because there has been huge volumes, a lot of speculative activity today. The delivery volumes would be pretty low, but unless it goes back to that 520, 530 mark, which is where it broke out from, which was the low done today, that is the only price point where it becomes a lot more sensible. The only stock which actually looks interesting is Kolte Patil, because that stock has not done anything for the last 1 year. Try to make that breakout move about 380 again. The last breakout point is 350, so that is the price point you want to enter. And DLF has been the strongest one, which would look interesting if it dips back to 460, 470 levels. So waiting for a much larger dip to actually participate.
Okay. Tesla, and we understand from our sources that the Elon Musk company is in talks with the Indian government to actually set up a factory with up to 500,000 annual capacity, and guess what? A price as low as 20 lakh rupees for a Tesla car. Now, this is something really out of the extraordinary, custom-made, made in India car, and affordable one at that. In fact, let me take it across to Sumit Chaturvedi, my colleague, who's picking up more on this from his sources. Sumit?
Billionaire Elon Musk-owned Tesla has ambitious plans for India this time. It's planning to have a capacity of 500,000, 500,000 cars this time in India. Well, it's a huge capacity considering its electric car maker. Also, what it plans to do is to launch a car worth just 20 lakh rupees. Remember, it will be then the cheapest car of Tesla in India and the world. It's coming close on the heels of companies like Hero Harley coming with affordable Harley. So Tesla will come with an affordable Tesla for India. That's the plan, what electric car maker has discussed with the government. Sources have told us that Tesla is very serious this time, and Indian government is also serious to bring Tesla to Indian shores, and that's why a huge plan has been discussed, and it's going to get a green signal from the authorities concerned and government whenever it's put in a formal way. As far as Tesla's plans are concerned, it's clearly want to not only depend on China for Asian manufacturing. India can be a big base as well. Also, to put into perspective, 5 lakh capacity of Tesla is going to be the third largest in India. So far, if you look at Maruti and Hyundai are the only two car makers that have capacity more than this. And other luxury car makers like Mercedes, Audi, BMW, they manufacture around 20,000 cars in India. So Tesla will be huge, as compared to all of them. This time it looks it's quite serious. Well, as Elon Musk, the owner for Tesla, he met PM Modi in June in US, and that time he has said he's a big fan of PM Modi, who wants him to come to India, and he's also quite serious about it. The company is scouting for land in India, and it will be finalized by the year end. So it looks like this time Tesla is very serious about its India drive, and it will be unique and not very common drive.
Okay, so that's the take coming in. Tesla coming to India. Sandeep, what do you make of this one? Do you think it could be a serious contender to the other EV makers, the likes of Tata Motors as well as M&M? Okay, Sandeep is not with us, but let me toss that question to Naresh to just get a chart check going on a couple of these companies, Tata Motors and M&M.
So Tata Motors, M&M both need a little bit of a pause. It has been a one-way rally. So Tata Motors broke out at 460, then broke out at 530, and we've gone to 630. We've gone to an all-time high. And this was the high roughly back in 2015, 2016. So generally, we do not see a runaway rally when multi-year high has come. You need some bit of a pause. So expecting it to fade off going forward. So not very gung-ho. Same is the case with Mahindra and Mahindra. Being a leader, the last high was 1400, went up to 1600. So the recent move is a little overdone. So my view is there could be a shift in terms of leadership here. Ashok Leyland looks more promising because that's the one which has consolidated for a year. So time to expect a pause in M&M as well as Tata Motors.
Okay, let's on that note get in some closing strategies as well. Naresh?
So that would be a buy on BHEL, which has corrected from the top. In the last today's session at 91.92 looks like a retest of the breakout. A small stop loss at 90 and expecting a bounce here.
Right. Kunal, what about your closing ideas?
Well, I'll go a bit defensive, and Glenmark Pharma is something which I would look to trade at current levels of 675, 680 approximately where it's trading right now.
Okay, on that note, take a quick break, and it seems like just after hitting that all-time peak, the markets have reversed, and how? And you know, it really seems that it's only an hour market problem alone, because the rest of the globe is actually holding out well in the green. Asia closed in with fabulous gains after a very strong handover from the US equity markets. Europe is actually holding out very well as well. And same is the case for US futures. They're seeing actually a follow through from gains overnight as well. But our markets, yes, they've taken quite a tumble actually from the peak, almost 1% now on the Nifty, and more so for the broader end of the market. We'll take a very quick break on that note.
Welcome back, but it's a sharp fall that we are witnessing because we have slipped below the mark of 19,400 as we speak. And look at that intraday chart. The bulk of that cut has actually come within the last hour itself as well. Even the bank Nifty is something that had actually slipped into the red. There are names like Federal Bank, of course, which have a result reaction. Bank of Baroda, PNB, these are the counters which are taking quite a bit of hit. Bandhan Bank and IDFC First Bank are also there. Private banks, the leaders of ICICI Bank, Axis Bank, HDFC Bank, they're trying to put up a fight. But for now, it seems like that the bears are more in control when it comes to the Bank Nifty space because that's where the market is headed. In terms of the broader markets as well, there's quite a deep cut because the mid-cap index is down over 1%. The small-cap index as well has been reeling under pressure. So all across, there is a bit of a slip as far as the momentum is concerned. However, what's surprising and what is holding out is clearly the IT pack. The leader of the pack is TCS today, a gain of over 2%, though it's of course cooled off from the highest point of the trading session. Infosys, that's a surprise one. Remember last quarter was a dismal one for Infosys. Maybe the street is expecting that there couldn't be any worse than that. And then LTI Mindtree, which is a new kid on the block as far as Nifty 50 is concerned, has also opened the innings on the front foot because that one is high by 1.6%. In fact, let's take the discussion forward and welcome Mahantesh Sabrad on the show. Mahantesh, first up on the IT companies itself, what's your take? And then we'll play out the management bites as well.
So as far as the IT companies' results are concerned, we saw that most of them have stuck to that initial guidance that they talked of for the following year, which was low single digits. So we saw TCS post a 7% YOY growth. We saw even HCL Tech post a similar number. I'm not putting much emphasis on the quarter-on-quarter number because this is a seasonally weak quarter and not a correct comparison. But that year-on-year comparison tells you that they are headed towards that 7-8% kind of annual growth rate, which is within the guidance. So I reckon that these results are more or less steady and in line with what was expected. Margins have also moved down as they were similar to the last year.
Looking at what's managing to hold out in this otherwise weak market, there's ICICI Bank, Axis, which are somewhat in the green still, all the way off from their daily peak. IT, of course, is managing to hold out regardless. There's Bajaj Finance, there's Hindalco, which is also seeing some strength, and HDFC Bank is still going good by about 0.5%. But needless to say, it's IT all the way, and not just the large cap names, but even Coforge, Birlasoft, Naukri, part of the Nifty IT, they are all the names which are only holding out as we speak right now. Weakness in PSU banks in particular, excuse me. So look at a PNB, a BOB, for instance, Delta Corp, we must highlight this one, and especially after that 28 odd or 25 odd % crack that the stock saw yesterday. Today, while it started off just about marginally in the green, but since then, it's really been a one-way slide down, now also down about almost 5% as we speak right now. And this after some of the marquee names actually selling into the stock weakness yesterday. Kalpraj Dharamshi is one name which actually came out in the bulk data just yesterday. Mahantesh, just wanted to get your sense in on this 28% GST, which was marked out just day before evening by the finance ministry on gaming, and without any distinction on skill-based or money-based games. What happens to the prospects of Delta Corp now?
So this is a very key negative development. As you know, this is a very punitive kind of tax structure for the gaming industry overall. And they need to now remodel their revenue streams, remodel their cost structure such that it becomes once again profitable. How and when will that happen is a question that is very difficult to answer at this juncture. But suffice to say that that GST has come in as a bolt out of the blue, which wasn't in a way anticipated anywhere else. This also would now lead to other kinds of, risk aversion to other kind of stocks, particularly on the online space, particularly e-commerce related, and so on and so forth. It's gonna be really tough for some of these companies now.
Of course, we're going to see one listing as well. And remember, Senco is going to be listing tomorrow with peers such as Titan and Kalyan. And I was just looking at how the peer comparison stacks up in terms of market cap, the sales, and the EBITDA margin along with PEs. Titan, of course, is trading at 82.7 times. Kalyan comes at a 33.8 times. And as per the last monitored figures for Senco, it's only at a 15.5 times. It was, of course, very attractively priced at 370 rupees per share of the issue price. And, the size was around 405 odd crore rupees. And it's well known the kind of subscription figures that Senco managed to clock for itself. Mahantesh, just wanted to get your sense in, because the gap between the largest player within the gold jewelry market, or, the larger jewelry market, and then, of course, its other peers is extremely huge. Could the likes of Senco or Kalyan, etc., try and eat into the pie of Titan?
I think will be very difficult. Now the listed space for gold jewelry is becoming very crowded, I would say. I wouldn't say that this is opened up choices for investors. Titan is a different league kind of company. It's something which has demonstrated business growth for several years now, and investors are quite comfortable with the growth story of a Titan. The other Me Too kind of jewelry companies would essentially remain Me Too itself. I don't think, this is the classical case where more the merrier for the listed space. I think the valuations will indeed tumble for the other set of stocks and not eat into that for Titan. I continue to believe that Titan will command that premium that it has done so far.
Meantime, since we're talking about the Senco listing, let's go across to Vinny to find out what the entire analysis is. What's the various probabilities of where the stock is likely to open? Because Vinny, this one saw quite a high subscription figure. So the listing is expected to be on the positive side.
Absolutely, we are expecting a listing coming in on the positive side. Let's not forget the subscription that was at 77 times as well. And what we're expecting is obviously the issue price is expected to be at 317, but it's expected to open higher than that. Other than that, in terms of the market cap, it's expected to be at around 2,500 crores approximately. Counting it at the 317 rupees, if it lists at that price, the market cap would be 2,461 crore rupees. So obviously, higher the price that it will list at, the market cap also will be high over there. Currently, when you look at it in terms of the valuations and comparing the past valuations, that is at around PE is at 15 times versus a Titan and a Kalyan, which you see is much higher in terms of the valuations coming in there as well. Also, let's not forget the company's trend in terms of FY21. The revenues have also seen a strong growth coming in over there as well, almost 1.5 times in terms of the growth in terms of revenues, almost doubling there in terms of revenues. Now the revenues in 2023 were at 4,000 crores as well. So interesting listing that we'll be watching out for tomorrow.
Taken, Vinny, so we'll watch out for that listing tomorrow. Expected to be quite a bumper listing. But in the meantime, since IT is the flavor of the day, why not listen in to the commentary coming in from the top brass at TCS as well as HCL Tech?
Remaining stable as this was in Q4. Like Q4 also we called out there is some certain uncertainty because of macro change situation. It continues to be around that, and but overall you saw that our TCV continues to be very strong. Our order book is very strong. So our long-term prognosis is good. Short term we need to see, like clients manage their budget based on the uncertainty, and we will work on that.
This is a situation where, really look at 5 out of the $10 billion, we've done $5 billion from North America and $3.2 billion in BFSI alone. Okay. So the demand environment as such is looking good. I'm not seeing any problems with that. The kind of deals that are signing up, they're all, long-term committed deals, right? But how we execute them, how do we ramp up and what is the pace at which we want to ramp up is something that we are working with customers, right? Clients really look at some of those 3 or 4 situations today, right? Now, the generative AI hype which is happening, is the architecture in which we have agreed to execute, is it fit for purpose? Will it accommodate the generative AI kind of technologies as we progress so that the architecture is really future-proof, right?
This will be in addition to the revenue guidance that we've given. Normally, our revenue guidance is organic guidance, and this is a very good acquisition for us because automotive software and automotive engineering is one of the biggest spend areas in the engineering and R&D services, and we were a little under-indexed in this space and looking for acquiring the right assets to enhance our capabilities. And with our global capabilities and the strong capabilities in automotive of ASAP, we believe it's a great combination and it will help us to get some good traction in this segment. I think it's very, very specific to the type of demand that comes in and the locations and these type of skills and all of that. So obviously, I don't think we will grow without adding any headcount. There will be some addition of headcount to kind of support the growth because we have the ask rate for the next 3 quarters are quite high. So there will be headcount addition.
Right. Federal Bank hasn't seen any recovery. In fact, the stock is now down about 6.25%. Delta Corp has slid down almost about 5%. Manappuram is down 4.6%. BOB, Power Grid, they're all in the as we speak right now. Kunal, what explains this sudden slip after, and I'm talking about the overall market here, not any sector-specific move. Across the board, you're seeing selling besides IT.
Well, I think largely, as I said earlier, that 90,500 broadly is a major resistance. And time and again, we've seen that the index has tried to scale past about the 9,500 mark. but we've seen supply or resistance coming out for the index at those levels. Now, one of the tricky parts for the markets today was, when I looked at the options data from the start to the mid session and till now, is a change because today is a weekly expiry on Thursday. So there's been a lot of change in the options data. So for example, we started off the day where there were a lot of 19 put writers at the 19,500 strike for the index. So if you look at the first couple of hours for the index, the Nifty was maintaining about the 19,500 mark on the back of a lot of writing. Midday somewhere is where the data changed completely, and you saw just selling, which emerged at the 19,600 call, which means that from being a support-oriented market, it then became a resistance-oriented market towards 19,600 mark. Then the Nifty spot made a high of 19,567. We could not cross the 19,600 levels, and that selling pressure on the call side managed to exacerbate pressure on the indices. So I think what you're seeing today right now is more fluctuation based on the expiry. But on the other hand, it's also the higher beta stocks which have taken a lot of knock as compared to those traditional low beta or the large cap names. So I think that's what I would believe, that it's a balance which the index is trying to get into. Maybe a couple of days of more whipsaw which we can see for the indices, but sooner we settle into a trading range and we come back towards the major support, the better would be the risk reward for the index to get into a buy zone.
We're just talking about Federal Bank. Mahantesh, did you get a chance to go through the numbers? And with respect to the prospect of what's happening at the bank level itself, what's your take?
Sorry, which bank is that?
Federal Bank.
Central? No, I didn't get a chance to look at it, but sorry, I couldn't get a chance to look at the
no
numbers.
Worries. No worries at all. So that's one of the counters which is reacting. The other one which will react to earnings tomorrow will be Wipro. Remember, the expectations are fairly muted because they themselves had guided for a cut of anywhere between 1 to 3% on the top line. As a result, the margins are expected to be sub 16%, sub 17% actually. So we'll watch out for that as well. The bottom line too is going to decline. We're working with a number of around 3,040 crores at the bottom line. And if you look at the internals, the thing to watch out for will be the BFSI segment, which has been rather weak. As well as what the commentary is about going forward, because in terms of the Q2 guidance, the street is penciling in a cut of around 1% to a growth of 1% when it comes to the Q2. So we'll watch out for all of this. But the expectations are fairly muted. The stock is going with quite a bit of expectation because it's trading in the green right now. But let's see what the company actually delivers as far as Wipro is concerned. In terms of the other internals of the markets, it continues to be the names that we pointed out, defense names like Data Patterns, MTAR Tech, some smaller companies, the likes of Mahindra Holidays, APL Apollo, they are seeing quite a bit of traction as well. But Mahantesh, just wanted to get a sense from you with respect to the entire real estate pack. Of late, there is this renewed interest around the entire pack. What would be the monitorables basis which you would select a real estate company right now?
So for a real estate company, the key monitorable would be what is the overall square feet under development. That is one. But how are they gonna meet up the development challenge in terms of availability of funds? If it is going to be a debt fueled kind of growth, I would be a little cautious. You will notice that some of the real estate companies nowadays have either changed their business model or wanting to change their business model to become asset light kind of company. That means they primarily work in a co-development kind of process without really investing into the underlying land bank and so on and so forth. So therefore the key monitorable will be what is the kind of fund availability they have for their overall development projects that they have outlined for themselves. Lesser the amount of debt that they undertake, the better it would be.
Okay, time now to take some BTST ideas from our chartists as well. Buy today, sell tomorrow, or is it sell today, buy tomorrow? Let's go to our chartists to find out just that. Naresh? Naresh, you'll have to unmute yourself.
First would be a buy on BHEL, stop loss at 91, target price of 95. Second is a buy on ICICI Bank, clearly showing strength today. Just 5-7 points away from an all-time high. Stop loss at 950, target of 975.
So those were the top BTST ideas coming in from Naresh. ICICI Bank is something he's pointing out. Kunal, what about you?
Yeah, even I have ICICI Bank as a buy. I think the stock is showing a lot of traction today. And more importantly, I think it's showing the solidity and outperformance as compared to many of the other peers in the banking stocks. So would suggest a buy. My targets are a bit higher towards 1,000. Stop loss could be kept at 940. Ipca Labs is the other stock which is slowly and gradually gaining a lot of traction. Now, I think it's at 760, 65 odd levels. So looks to be an attractive proposition for a short-term play. Targets of 800 approximately on Ipca Labs, which is a buy. Stop loss at 754.
Right. Okay. Just looking at some of the closing rates, and IT definitely has been the saving grace today in bits and starts. Some of the banking and financial names, the largest ones out there, and maybe a few odd metal names, although they too couldn't quite resist the fall that the market saw overall. But everything from a coal to a Maruti, DRL, Adani Enterprises, Eicher, Reliance. Look at the fall that stock has seen in just the last few odd minutes or so. Or for that matter, even an SBI and L&T Bharti, they all gave up all of their morning gains and are closing in the red for themselves. Naresh, let's get a chart check going on the two other heavyweights, a Reliance and an SBI.
So Reliance is promising because the stock has made a good breakout move, and this is a little bit of a fade off move. The last gap up move was around that 2700 to 2680 mark, so that should act as a support. We are not far away from that, so closer to 2700 you actually want to be looking at a long. So like Reliance, some more bit to go before it becomes a risk reward entry. State Bank of India, not really looking at it sideways totally till the time it doesn't cross 600. The trend doesn't start. It goes back to the same 560 to 600 range bound moves. So more interested in Reliance Industries. Importantly, Reliance being one of the larger weights makes it all the more important.
Okay, that's the take coming in on Reliance, SBI, those two heavyweights under pressure as we speak right now. Mantesh, I don't know if you have a buy or a sell list ready, but anything that's looking overvalued or undervalued in the market right now?
So I've been batting for the capital goods industry per se for this year. Most of the capital good companies are now doing relatively better. There's a capex surge that is in a way happening. Their order books are growing. Their cost structure is becoming a little more better because their commodity costs are down, and the funding need typically that is required for project-based capital goods company is now easing out. So all these factors tell me that the capital goods sector should be better off in the year ahead. But today's moves on most of the companies are kind of can't read into what is really happening today.
Yeah, of course, one day moves are difficult to judge. But Kunal, quickly your take on JSW Energy. The company comes out with its earnings tomorrow, has been having a great run. But today it looks like it's sensing a weak set of numbers.
Well, I would be very bullish on it, Anisha. So in case, even if the stock actually goes into a correction post results and say comes back towards the 280 mark, I would still be extremely bullish because the stock is very close towards showing a golden crossover where the 50 DMA is just about on the verge of breaking past about the 200-day moving average. Now there are two things which can happen. One is either the stock comes back, retraces towards the 200-day moving average before it gets back into the line of the breakout of the golden crossover. That could propel the next move. Or the other way would be that the stock would probably get into an upward trend and break past about the 320 odd mark. Whichever way we look out for, both of them indicate a positive trigger for JSW Energy. So I would clearly be very bullish on JSW Energy. And if there are any dips towards the 280 mark, that should be a good buying opportunity.
Right, okay. Let's begin winding up for the day. And today, of course, clearly the star performers have been IT. TCS is actually, by the way, going home as the top winner on the index. It's closing in with a near about 3% gain. Who would have thought when we came into trade over that batter last evening, when the numbers were announced that this is how the stock is actually going to pan out. Similar is the picture with Infosys. 2.5% higher there as well. HCL Technologies covered all of its lost ground. You have Naukri, Birlasoft, Coforge. In fact, the top 5 winners on the F&O side are all Nifty IT constituents. That definitely is something. Bajaj Finance, HDFC Life, ICICI Bank were also in the green, but lots in the red. More so the market breadth and especially kind of drop that you had from the high to the lows of the day for the small as well as the mid-cap index. that's been more excruciating than what the Nifty saw on a day when it did clock a fresh life high for itself. So Eicher, Adani Enterprises, Maruti, Apollo Hospitals, BPCL, a good 2% lower there. Reliance down 1%, SBI nearly down 1%, L&T mildly soft, ITC a little bit soft, and so was Bharti and M&M. The broader end of the market, Federal Bank ahead of its numbers and after its numbers, down about nearly 6%, Delta Corp 5.25% lower, Manappuram, PNB, Power Grid, they've all been rank underperformers in the session. Even sectorally, if you think of it, there was only technology which managed to hold out, but rest all of the Nifty sectoral indexes have closed in the red for themselves. So be it banks, chemicals, autos, media, telecom, realty, pharma, cement, all sectors have managed red close for themselves. So there we are for the Nifty, 19,441, a good 100-point drop from the session top, and a day when we clocked 66,000 for the Sensex. We're closing in actually just mildly in the red. So that's pretty much it on this edition of Closing Trades.